What do you say when you constantly get what I would assume is this chatter about these discounts?
Well, I say a couple of things. First, we're interested in long-term investing, and we're interested in the performance of the underlying companies. Generally, those discounts sort themselves out over time. But in addition, we take actions to try and take advantage of the discounts. For example, as you noted, Liberty Sirius trades at a 30-ish, 28, something like that % discount to the underlying SiriusXM stock. We think that's kind of silly. We try and take advantage by buying back the Liberty Sirius stock. We bought back $400 million worth in the last 6 or 9 months at a substantial discount. So if Sirius today is trading about $6.15, $6.17, something like that this morning, the price we paid for the Liberty Sirius stock shows an underlying price, a look-through price for Sirius, I think, of $4.77 per share. Right. We like buying back stock at $4.77 per share.
I would bet you do. Now, there was a time, it's a while already ago, where you did make an offer to try to buy it in. It didn't work out. Is that something that you would ever revisit? I would assume at some point you might.
Yes, absolutely. But we're pretty disciplined, we'd like to think. So using Liberty Sirius stock, which trades at that big discount, to buy in Sirius stock, which trades at full value, and have to pay a premium even to the Sirius stock, seems like a losing strategy for our Liberty Sirius shareholders. So we're going to wait for the right time, or we're going to use other currencies, or we'll do something different. But I doubt we'll buy it. In fact, I'm pretty confident we won't be paying a big premium for Sirius in Liberty Sirius, the discounted currency.
All right, well, I'm going to have a chance to talk about Sirius's business with Jim Meyer, so we don't have to spend too much time on that. We have Liberty Formula One, Series A, up right now on our
we don't
on
call
the
it
screen
that.
There. Say again?
FWONK.
FWONK.
Formula
yes,
1K.
FWONK or FWANA also. Yeah.
Yep, the A's.
Chase Carey, the guy who runs it, is presenting right now.
Rockstar.
What's going to go on in the United States? Are you guys making progress in terms of this hope of bringing what has largely been a European sport into the U.S.?
So I think that's one of our long-term absolute key goals. One could say that the prior management team was focused on short-term results, and so getting venues which were willing to pay you a lot of money but didn't necessarily build the long-term health of the sport were emphasized relative to what we hope to do, which is grow the United States. And we've had very positive discussions in Miami, in Las Vegas, places which would complement the race we already have at Circuit of the Americas in Austin that would hopefully grow demand in the United States. We've done other things about growing demand in the United States. We've moved to ESPN, getting far more exposure on ESPN, on ABC, on ESPN2, and also pushing our own OTT product in the U.S. So all
where
those
does
things.
that stand, pushing your own OTT product in the U.S.? The idea of a subscription service for people who obviously love this kind of car racing.
Look, there are a couple things that are going to happen. We're going to have free-to-air, which could be on ABC. We're going to have pay, which could be here in the United States on ESPN, but in markets like the UK or on B-Sky B. But we're also going to build two kinds of digital product, I expect. The current one is the one we're focused on ourselves, building an OTT product. We launched that this year in May. Really, it's in beta. I expect over time it'll fill out and be a very rich product. We have cameras in all 20 cars. We have tons of data. We hope to build a product which is differentiated and shows real fans who have real interest a ton of differentiated material that they can only get on the OTT product. The other point is, I think over time you'll have over-the-top digital players, the Amazons of the world, bid on our content. They're increasingly become major players in the video space, both in scripted content and increasingly in sports, and I expect we're going to be beneficiaries of that part of digital as well.
Okay. I know part of your presentation, you, broadly speaking here, said the content business, I won't quote you directly, but it's not the best right now. What do you mean by that?
Look, scripted content is a very crowded space. There are many kinds of competition for attention. For the 24 hours a day, screens time has increased dramatically. But there are many things competing. And scripted content has not only had an increase in investment among traditional players, it's had many new players, whether it be Netflix or now Amazon or Apple enter. When you add what some people estimate, David Nevins of Showtime, for example, thinks could be $100 million of spending on original content.
$100 billion?
A year.
$100 billion a year?
Yeah. How do you get a return on that? Well, you can see how it easily adds up. Netflix is going to be 12, Amazon's going to be 15, increasing.
Amazon's going to be 15. Wait,
that's what some people estimate. They did 12.
Eventually.
7. No, next year.
Oh, wait, Amazon's going to exceed Netflix?
Yes, that's
year?
One of the estimates. Look,
okay.
I don't know. They don't tell us their budgets. That's an estimate of some observers. Well, the rumors about what they're going to spend on Lord of the Rings, you can see how they could get there pretty easily. So when you have that kind of spending, the right question is, how does someone get a return on all that capital? And I think that makes it a very crowded space. No matter how good your content is, and costs have gone up per hour, but no matter how high quality the cinematography, the acting, the writing, et cetera, just how do you get a return on that much capital, I think, is a challenge.
It's funny, you mentioned Apple as well when you brought this up, and so did John Malone, who I spoke to earlier. Is Apple going to become a serious player in terms of buying content?
Well, we'll see what they do. They're clearly ramping. They've done some interesting things. They spent $20 million on a 30-minute segment on carpool karaoke. What traditional content player could justify that kind of spending? But if you're Apple, with 1.4 billion devices out there, right, and the opportunity to sell the 1.5 billion device, it may very well make sense. They compete on a different set of terms. And I think they're very smart. Tim Cook, Eddie Q, they know what they're doing, but doesn't make it easy, doesn't make it simple for traditional players.